Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 12th of January. Starting off with the FTSE 100, which after doing well for most of the week, then finally succumbed maybe to the Rachel Reeves experience, and we on Friday reversed the gains of Thursday, so that leaves us back at the breakout point there towards 82.30, and below that we've got the risk of either a test of the 50 and 200 day lines near 8200, or worst case down to the floor of the channel there from September 23 at 8100. I suppose at the moment we're just hoping that we'll head back to the 50 and 200 day lines, which are both rising, and therefore give us the hope that we're in the run-up to a golden cross. Obviously, big wall of resistance there at 8400, even if we get out of jail on the latest negative setup. Moving on to the DAX, and here the position is that we also ended the week on a bit of a low note, with the DAX basically double topping with December resistance around 20,500. I suppose here that would leave us looking back down towards the 50-day line, and late December support, it's 19,700. But I suppose at least the good thing here is that an end-of-day close through 20,500 should give us 21,000 relatively quickly if we can snap the Friday pullback. Moving on to the Dow, and here it's done what we didn't want it to do, which is head towards the November support there. That's 41,600. There's now, I suppose, a real risk that we will head down to the 200-day line at 40,900 for the first time since November 23. But ideally, we get away with a test of November support and then head higher. Resistance, obviously, at the moment at the 50-day line, 43,400. RSI looking horrible. We've had multiple failures at and below RSI 50, and we're not oversold yet. So that does suggest there is a risk of not only a test of November support, but something a bit worse than that. Moving on to Bitcoin, which had a brief flurry through 100,000 again, which I suppose everyone and their mother then decided that they would take at least take some profits on. And here the key is that we hold on to the uptrend line there from November, 92,000. Below that risks a test of November support on the way up at 85,000. At this stage now, probably one would say that unless we get back above the 50-day line, Bitcoin is at least a temporary sell into strength. Moving on to the gold situation, and here a pretty strong setup in the sense that we had the bounce off RSI 50, and then we've had a push through a falling 50-day moving average, which tends to be a strong signal there. Initial resistance there towards 2750, and obviously the big picture here is that we head up to as high as 2920, maybe by the end of next month if everything goes right for this market. There is a line of resistance to cross there around 2710, so we're not there. We're not too far away from that, and so if we break that line, then one would expect quite a big or a quick snap through towards the new record level target. Moving along to the state of the British pound, which obviously at the moment is not looking great, and maybe give some pleasure to people who are shorting it to their heart's content on the basis that basically we've got an analogous situation to that of the mini budget, but the pound is still around 20, well at least 10 cents, 10 to 12 cents higher than it was. The floor there around 108, and we're still at 122, so over 14 cents for this market above that floor. Let's see if history repeats itself. The technical target here at the moment, there is $1.18, and we're looking for that really over the course of the rest of January, while we're below the last support here at around the 123.50 level. Moving on to the stocks, and starting off with something which has been quite a decent mover in the recent past. It's been Argentex, and here you can see that we've gapped through the 200-day moving average, the second gap in the recent past. It was a bear trap reversal that started the recovery here, and second gap through resistance, or resistance line there from July. Very strong signal, as was the weekly close. We've been looking for 39 pence, which is the top of that broadening triangle from the end of July, and hopefully we'll get that over the next week or two while we're above the floor of the gap there at 33 pence. Moving along to Amaroq, which we haven't looked at for a while, and in the meantime, everyone and their mother taking credit for the rally here. I suppose the main credit goes to the company itself, but we blew the doors off the top of that rising trend channel from August. We had a target there around 106 pence. Above that, we're now looking for a fresh line of resistance from the beginning of last year. That's heading towards £1.35, and we're looking for that as soon as the end of this month. I think the other sizzle here, which maybe people haven't thought of, or maybe they're daring not to speak of, is the way that Trump has his intentions on Greenland, and clearly that delivers a revaluation on any company operating there in quite a significant way. But in the meantime, above 106, looking for 135 by the end of this month on Amaroq. A bit of issues on the gas front in the UK, and we've only got a week to go in terms of supply. Might help Angus, which is now broken through the 200-day line again for the second time in 2 months. Maybe this will be second time lucky. Initial target here, the top of that falling trend channel there at 0.41. Best case, if I suppose we start running out of gas totally, or would be up to as high as 0.65 or 0.66 on a 2 to 3 month view. But the key here, I suppose, is that we are hoping that the shares will at least remain above 0.3, recent support for the stock. On to Borders and Southern, which has rocketed over the recent past. We had the two unfilled gaps to the upside, our favourite setup there, and above the old resistance there at 2.7 pence, we were looking for the top of that broadening triangle there from back in the autumn of 2023, as high as 4.3 pence. We're looking for that while we're above 3 pence at the moment. Looks like we're in a mid-move consolidation there. Moving on to a stock which I haven't looked at for a bit, which is European Metals, and here first signs of turnaround. We had an unfilled gap to the upside, and we've held that, which is very healthy indeed. And now we've broken the 50-day line. One would expect after that bear trap gap reversal that will go up and stay up, at least while we're above the 50-day line there at 7.6 pence. Looking for the top of the triangle as high as 11 pence by the end of next month. But the key here is that bear trap gap reversal does its stuff. Moving on to EnergyPathways, which has seemingly been in this consolidation for months, or at least since the end of October. We're about to break that triangle. Well, we need to break that triangle at 9.3 pence or 9.4 pence. Probably will do the trick. Another end of day close above that, or an end of day close above that, and that could hopefully take us up to the top of the rising trend channel from back in October as high as 16 pence. Maybe that would happen by the end of next month. Ideally, as I've said before, we stay on the right side of 8 pence while we're consolidating within that triangle. On to a stock which looks as well, actually, given the SpaceX link, should be perhaps rather higher than it is. We've got the rising trend channel there on Filtronic up to 110 pence. We're looking for that while we're above the old August resistance at 82 pence. But this looks like a stock which actually could deliver much more. And if you're a fan of the shares and looking for greater glory, that line there from back in February last year, heading for the 130 plus level, could be a target for February, March time. But the risk reward now above 80 pence looks quite decent. Moving on to Falcon, and here you can see that we've got a recovery within this broadening triangle from back in the spring. The top of the triangle there heading for as high as the 7.3 pence level, looking for that by the end of this month, while we remain above the 200-day line at 5.5 pence. 50-day line rising now. We've got those consecutive blue candles and the bullish divergence as well in the RSI window, which is all looking or making that look decent. Moving on to a situation which hopefully will have legs over the near term. Harvest Minerals breaking both that resistance line there from back in October at 0.51 pence and the now rising 50-day line at 0.53. Above that combination, looking for up to 0.9 pence by the end of next month, assuming that this stock will rebound as quickly as it went down back in October. We've also broken neckline resistance there at 0.57 to end the week, which gives the whole thing a rising trend channel base with a good look. Moving on to Oberon, which has been rising by stealth since its update in December, and nearly up to our target there, the rising trend channel there from the end of 2023. The target there, initial target there, up to 4.7 pence, and that's founded while we're above last month's resistance, 4.2 pence. The next level up would be as high as 6 pence, which is the upper parallel of that rising trend channel base from the middle of 2023, and we'd be looking for that by the end of March or even sooner, ideally by the end of February. On to a stock which has jumped after a long time in the wilderness, which is Proteome, and here, good warning here with the unfilled gap to the upside and another unfilled gap on Friday. That means that at least while we're above recent neckline resistance at 4.1 pence, the initial target here at 5.25 seems to be a done deal, and then up to as high as 7 pence, hopefully by the end of next month or even sooner. But the key here, remaining on the right side of 4 pence. Not much charting data to go on with priority, but there is enough to go on in terms of just assessing it now after Friday's big move. Bear trap from below the initial range, which was based at 10.25 pence. Above that, obviously we're looking for a retest of the top of the initial range at 13.5 pence plus. And the other point to note is that even though we went lower at the beginning of this month, we had a higher RSI trace, so there was bullish divergence there. And finally, on Friday, we'd opened at the low and closed at the high, which tends to be a decent signal for a follow-on move. On to the last two. First one is Victoria, which has blown the lights out in terms of what we were expecting here. Initially, we're dithering there near the 70 pence level. The target then was up to 97 pence, which seemed to be rather ambitious. And the target after that up to as high as £1.65, which still looks ambitious, but could be done, especially while we have the shares on the right side of £1.30, which was resistance both on the way down and the way up. Intriguing move here for Xeros in the sense that we've had stake building from Dowgate. The initial target here was up to the 0.6 pence level, but given that it is Dowgate and they seem to be quite keen, expecting up to 0.84 by the end of next month, which is the top of the, which is the upper parallel of that broadening triangle base. This stage only back below the December resistance on the way down around 0.48 pence, really delaying the upside scenario. But you can see once again, Friday gave us opening at the low, closing at the high, which is a very strong signal. Last but not least is Vinanz, which will be ringing the bell at the London Stock Exchange tomorrow morning at 8 o'clock after migrating from the Aquis market. Here you can see in terms of the daily chart, we've been in a rising trend channel since November 2023, and the shares basically rising in a step fashion, hardly any retracement, hardly any red candles. They're quite incredible, really. Rising trend channel based at around 14.5 pence, and above that, looking for up to 23 pence, hopefully by the end of next month or even sooner. The bull argument remains firmly in place while we're above that rising 200-day moving average at 13 pence. That's it for me today. More updates during the week.